Welcome to another episode of Real Deal Investing. I'm Jerron Kelley, one of your hosts. I'm a real estate attorney and real estate investor. As always, we have my co-host here, Larry Mastropieri, also a real estate investor and a real estate broker. Great to have you as always, Larry.
Thanks. Great to be here.
And today we've got a special guest. We got Max Granofsky, a good friend. I certainly haven't, and Larry as well, have done business with Max for a number of years now. Max is a great guy. He is the owner of Arbor Residential. Arbor Residential, I believe, has three different major practice areas that you work in. One is property management. The other is real estate brokerage, brokering multifamily properties. And then the third area is you syndicate properties for investors to invest in your investments and get a nice rate of return. Is that all
Absolutely.
correct? Good.
Yeah.
Excellent. Well, first of all, great to have you here.
Thank you, guys.
One of the things we like to do is, before we dive into the meat here, is just wanted to get a little bit of a background about kind of, where you're from and sort of how you got into real estate and what your journey was to get here.
Sure.
Yeah.
I'll give you guys a broad stroke. So I got started in the commercial real estate business about 12 years ago. I got a master's in real estate development and finance from Nova Southeastern. And at that point in time, I also started with Rotella Group, which is a commercial real estate brokerage in Fort Lauderdale. I did a lot of commercial leasing, retail leasing, office leasing. Spent about 4 years there doing that.
Not much multifamily.
Not much multifamily at all at that
commercial.
time. Yeah. So I learned the ins and outs of leasing, right, and what's involved in there. And it took a while to really get going, but after a while, I realized that the best thing to do for me at that point was investment sales. So I started looking around for deals to purchase, and I actually found a small strip shopping center in Cooper City. And I syndicated that. I used a little bit of my money, family's money, and also a couple family and friends.
Great.
And that was my entry into real estate investments.
What year was that?
That was 12 years ago.
Okay.
So,
Yeah.
2012.
You've been in the game a while.
Exactly.
Yeah.
And I learned how to manage one of these assets, pretty much by myself. It was a 10,000 square foot shopping center, 10 tenants, couple nationals, but mostly mom and pop. And I managed that for 2 years, and learned the ins and outs of it. And at that time, a friend from college invited me to invest in one of a deal that he found as an 8-unit multifamily in Coral Ridge. And him and I both purchased that, and we were managing that ourselves too. Everything from we would do everything ourselves, painting,
That's
plumbing.
great.
Yeah.
That's great. That's a great experience.
For sure.
Yeah.
When you own
through it.
properties, you need to know A to Z,
Yeah.
right? Doesn't mean you want to do that for the rest of your career.
Right.
But you need to know how things work, right? As both of you guys know. And it was really interesting. So at that point in time, I had these two different asset classes, right? And I really favored multifamily at that time because we lost one of our retail tenants. So we had, call it 10 tenants. I lost one tenant, then I lost another one. It took me almost 2 years to lease both of those up.
It's a lot of vacancy.
A lot of vacancy.
Yeah.
And I did everything I could to try to get those leased. I was cold calling.
You were grinding it out, I'm sure, to get it done.
Oh, yeah. I would be knocking on doors. I'd go to other shopping centers getting chased out, because that's what I was taught to do. But a lot more than the average person.
So you would go to other shopping centers that had tenants and just be like, hey, would you prefer to move into our space?
Yes. So at my
that.
first brokerage, that's what we were trained to do. And that was the thing that you do. You have your flyer of your space, and you go around to different tenants. And you're not necessarily trying to pick that tenant off, but you're trying to just network, right? Maybe they have another client or associate that may be interested, right? Or maybe they're looking to expand.
New location, yep.
But there's a lot of property managers at the time that were onto that, so we got chased out of a few.
That's
But
so
it was an
funny.
interesting way to get into the business. It's really like boots on the ground, cold calling type of thing. So at that point we had these two assets, and I realized, if we lost a tenant in our multifamily building, I could have that leased out in 2 days if I worked hard enough.
Supply and demand. It's the demand we're talking about here. Demand for multifamily is always, always high unless you're in a major recession. But,
Absolutely.
Yeah, but even then, people still need housing.
They
So
do.
Maybe demand drops a bit, but
exactly.
you can get it filled. You may just have to lower your rent a little bit.
And I haven't seen one of those environments yet, but I would think you would just have to lower the rent. Now, versus the mom and pop retail where it costs over $300,000 to even get up and going, right? And one of the first things you'd probably close in the worst of times is one of your locations, one of your business locations. So, so we sold the shopping center. We actually purchased that shopping center from a gentleman who took a little bit of a loss from it, and that was the last loss I've seen someone take from then until today in commercial real estate. And the deals that I've been involved with, which is kind of interesting. I was thinking about that the other day.
Sure.
That is interesting.
That means from then and on, any deal that I've been involved in, it's been up and up and up.
So I'll just comment on that. On the resi space, there's been people that I've dealt with that made bad decisions and they've lost money over the years, but very few and far between. More recently, I've sold, 2 or 3 deals within the past 3 to 4 months where they've purchased them a year or 2 ago and they're selling them for substantially less. There's a condo we have under contract right now. She paid $1.5 million for it. We have it under contract at $1.2 million. Oof. 18 months later from when she purchased it, which is crazy.
So we're starting to see that happen.
I think condos where it's really happening. Yeah. That space is not good. Yeah,
sure.
Yeah, see major drops. So what were you seeing?
Just in multifamily as of late, I've seen a little bit of price correction. Okay. Maybe there's some people. I think there's now the owner that may be willing to take a little bit of a loss. Also because some of these owners may have owned this property for so long that loss. I shouldn't say.
May not be an actual loss.
Yeah, not an actual loss, but
a price drop.
Yes, correct.
Like what their expectations are. Their expectations are that they could have gotten X dollars a year ago, but now maybe it's got to be X minus 50K or 100K. But maybe they've already made 100% on their money over the last 10 years. So.
Exactly. There's a lot of cash flow with these. Sure. Hopefully, cash flow with these assets. So they take all that into consideration. They look at, hey, the whole plan was great, so I am willing to sell for a little bit less than I could have last year, 2 years ago, or maybe in the future too.
Yeah.
Who knows?
Yeah. So let's finish your journey though. So commercial, when did you bought that 12 years ago? How long did you own that commercial property for?
The shopping center we sold probably about 2 years. I owned it for about 2 years.
Okay, got it. Did you make a profit on it?
Yeah, we did. We made a profit on it. Yeah.
Did you ever fill those 2 units before you sold?
I did, but it took me the whole 2 years.
Oh, got it. Okay.
Did you also have to offer any concessions? Did you have to?
Of course.
Oh God. So that hurts.
It does.
Yeah.
It does, and it's scary. When you have almost 20% of your income just sitting out there.
Well, probably I'm assuming, but you correct me if I'm wrong. Like when I started doing this in 2011, same time, every deal I did was all the money I had. Sure. Everything was in this one thing.
All in.
And so how much you care about those 2 units, that duplex that I just bought in 2011 is so much more important than like today, that duplex. I don't even think about it, right? Yeah. But so I'm sure you're feeling the same way. Like this is my sole focus besides doing my day job to just keep the income coming in, right?
Sure.
Yeah. Sadly, I see that, I'll give you an example. I see that with my clients so we have an eviction client up in Jacksonville, one of many that we have, and she called me and reached out because she just found out that she had gotten a final judgment. We had gotten to the end of the eviction process, and she was going to go for the writ of possession to get the tenant out, and the tenant filed a bankruptcy. And so that bankruptcy is going to tie this process up for at least another 6 to 8 weeks, probably even a little longer. And, she was crying on the phone with me because it's her one rental. She doesn't know how she's going to pay for it. Even to pay for our fees to try to get that bankruptcy stay lifted was a real struggle for her. She had to put it on credit cards, and one credit card actually didn't go through, and she had to go use another one. So I feel for people that are in this position when she went all in too, I'm sure, on this rental property, and she thought it was going to be a great investment. So there's dangers out there. That's the point is, there's risks in investment.
Definitely risks.
There's risks.
Absolutely.
Real estate is a capital intensive game.
Absolutely.
Like you have to be prepared for those things.
And you have to have reserves. That's why banks look for reserves. Is that you can't literally put every dollar in. I mean, you probably could with a conventional loan because they don't care as much about reserves, but that, you could end up at a bad place.
Absolutely. A lot of people forget that.
They do.
And a lot of people look at multifamily new investors and say, hey, this is a very close to risk-free asset as it comes. And it's not the case. The demand for units is there, but there's risk, and you have to have that risk premium, right? And some of the deals I've seen getting done over the past few years, I think people have forgotten that.
No risk premium.
No risk premium.
Yeah.
They just want to hold the asset. And for some investors that works, but a lot of others it doesn't. Yeah.
And there's and anything that you do in any type of investment, there's a level of sophistication. Just to circle back to that same example I gave, I feel terrible for this client, but after the eviction was filed, and certainly at the point with the bankruptcy, when I was speaking with her about this and consulting with her, she showed me that this woman had 6 prior evictions, and she was showing me on the court docket, and I asked her, I said, not to pour salt in the wound here, but why didn't you do a background check and what happened here? And she said, well, she told me some stories about how this and that, and she was, saying God bless you to everything, and she really worked her, and she had pulled on her heartstrings, and she's in this position. My other point here is that with any type of investment, you need some experience. It would be like me going into trading puts and calls and option trading and knowing nothing and just thinking that, this is easy. My first call that I put in, I made $2,000, so this is great and super easy. You need experience,
or at least
have someone that has experience, like a property manager.
Property manager,
or a syndicator, or professional,
attorney, or a broker. Exactly. So
I think that just goes back to the point, though. Like, if you're going to do this, like for that lady, if she's going to do that and make those mistakes, and it's like, make it worth it. Yeah. Like, be in it for the long haul. Like, this isn't the end. Like, don't plan to do one deal and then, because it was a quick buck, and think you're going to be done with this in a year or two. No, this is your life decision. That's how at least I perceive it.
I hope she gets through it, and I would love to see if 10 years from now she owns 20 units and she's doing awesome, and that's just a speed bump.
And so that's the point. Hope. Don't quit. You got to be ready to go through this, because I went through it, man. The 8 unit I bought in downtown West Palm, Max knows the property well too. He managed a bunch of stuff there. He probably still managed stuff there. And the first day I bought it, the SWAT stormed one of the buildings. Literally the day after, SWAT stormed the building, and I was self-managing at that time. That was 20 doors I had. And
welcome to the business.
Right,
welcome to downtown West Palm.
And that also goes back to like lack thereof experience. Like, we bought in downtown West Palm in a specific location that's just like historically rough. Didn't really entirely understand what we were buying, because historically I was buying duplexes in Boca Raton, and I went to downtown West Palm immediately. I was like, there were so many better decisions to make at that time, right? But hey, that was trial by fire.
Well, people look at this and they're like, oh my God, this is a 9 and 10% cap rate. This is incredible. Like, this is the greatest deal ever. How did anyone miss this? Let's get this under contract tomorrow. But they don't realize.
I drove it in the daytime, inspected it in the daytime, all good.
Yeah.
At night,
go to collect your rent at 9 p.m.
The streets were on fire. What is going on? Oh gosh,
too funny. Yeah, mistakes happen, but you learn from them.
Yeah, but I'm sure she'll get through that.
I certainly hope so.
It's a single tenant.
It was a single tenant. I think it was like a townhome, if I recall. It wasn't a multifamily, but she also was a realtor. So, and she didn't have a property manager. I think maybe she was overconfident, thinking that I'm in the real estate business, so I know, how to deal with tenants and how to.
No one knows everything. I don't know everything. It's always, you take a lot of information where you can get it from your friends and partners.
Oh yeah, right. We're trading information all the time. I'm talking to you. We're all talking to each other all the time about this stuff.
That's it. Sharing is caring.
Absolutely, 100%.
So you sold the commercial property, and you had already bought the multifamily.
Yep, so I held on to that. So I co-managed it with my partner. Still great friends with him today.
Great.
We only painted and did all that type of work for a handful of years. Right, you could only do that for so long, and then we hired another manager for that. So actually, we sold that property about 3 years ago. As of today, that's the only property that I've owned that I've sold. So I held on it for 8 years. But so around that time, I started acquiring more properties, sometimes for myself and sometimes syndicated.
Great.
Started growing the portfolio. My next big one was 30 units in Riviera Beach.
Nice.
Off of Avenue S.
Okay.
Blue Heron. And it was another one of those types of deals where, wow, the price per door is really attractive and the cap rate was really attractive. But I knew what it came with, and it came with a little bit more management-intensive type of responsibilities. But I took those on, managed it myself, realized what I like of management, what I don't like. So I brought in a couple managers. And then, so at that point, I had this team that was pretty well versed in a lot of different areas and a lot of different types of aspects of property management.
Self-managing.
Yeah,
at this
self-managing.
point.
Yeah,
Great.
just 100% self-managing. So then I opened the doors to managing for clients. Yeah. Because everyone up and down the street that had multifamily, they liked the way we maintain our properties. They liked the way that we handle our tenants and work with our tenants and respond to things and just overall presence on the street.
What year was this when you started opening up to taking on clients?
Yeah, so that was about 2014, 2015.
Got it. Okay,
yeah.
great.
So then we just started managing 8 units here, 10 units there, 15 units there. And then, simultaneously I was also still involved in brokerage because it goes hand in hand with everything, right? At the time I was just doing brokerage myself, hitting the phones, I have a long list of properties to go after, and I call number one to try to purchase them myself, and for whatever reason, if it doesn't work, I have a handful of friends and clients that may be interested. You guys are obviously on that list. If I send a property out, I want to make sure that I've vetted it pretty well and as best as I can. I don't just blast things out there, right? And I try to get some deals done and hopefully manage for those clients, and it just started snowballing and growing from there.
That's awesome.
And
Yeah, well, I purchased a sixplex from you guys. I appreciate that. Yeah, the one off Forest Hill Boulevard. Great property, great location. It's been a good asset. Definitely appreciated significantly in the last
amazing.
3-4 years since I've owned it. So I appreciate that. And you guys, you and Michael, who you work with on the brokerage side, Mike Hodgson. Consummate professionals, and it was a great deal. So, so. You build up the property management side of things, and of course started getting into the brokerage side. At this point, what have you built your property management portfolio size to?
Sure. So at one point we were probably at like 350 units.
Awesome.
This was prior to maybe 2020, prior to COVID, and then during COVID,
things got scrambled a little bit.
Yeah, things scrambled a little bit. We're trying to figure out which direction to go in, and the brokerage deal started picking up a bit too. With everyone wanting to get into this multifamily space, right? So our deal started picking up, and at the time I had a couple different brokers working with me. Both of them are still working with me, and
it's your own shop, right?
Yeah, so I'm the broker, and I have a couple sales associates.
That's right.
Arbor Residential for all three pieces of the business.
Yeah, so the syndication, usually we set up.
You'll set up a new LLC, of course, for that.
Absolutely.
But you're doing the brokerage piece of it, and under Arbor. Okay.
Yeah.
Good. What have some of the Let's start kind of with the property management side. What have some of the challenges been that you've come across? I'm sure the very beginning is just learning the business, which you were kind of alluding to, and getting your hands dirty. But beyond that, client acquisition, is that a challenge? What does that look like, and what other challenges have you had to overcome?
I would say one of the bigger ones that we came across at first is time management. Property management is so time intensive, as I'm sure we've heard from a couple of your other guests, right? It's extremely time intensive. And in order to provide the best service, you have to be on top of everything all the time, right? Or as best as you can be. And I actually took a few tips from one of your guys' podcasts that you had a few months ago regarding virtual assistants. So actually at that time, you guys piqued my interest, and I started.
We talked about this a little bit.
And I was picking your brain about it. And since then, we hired 2 full-time virtual assistants.
Love it.
Oh, cool.
Yeah.
Love it.
They actually didn't
We have a new one starting today. It's actually
awesome.
our first customer service and kind of outbound caller. So this is a new experiment for us. But but anyways,
that's really
didn't mean
cool.
to interrupt
I would
you.
love to hear how that goes, because that's what I'm also looking for too.
How did you end up going? What route did you go to acquire these?
So we
individuals?
used a company that sources virtual assistants in the Philippines.
Okay.
They handle all the payroll, the local tax, tax.
Makes it easy.
endeavors.
That's a great way to enter, right?
for
The space.
sure.
Yeah.
Do you remember the name of the company you use?
I'll get it too.
We use Virtually Incredible. I know they're in the
It's
property
Virtue
management
Desk.
space.
Virtue Desk.
Virtue Desk. Okay.
There's so many of them.
Yeah, I'm sure
there's
there
so
is.
many of them.
Yeah. And the virtual assistants that we brought on, they were part-time at first. Now they're close to full-time. They didn't have real estate experience, so we had to train them. And the first few, they left and went to go do something else. So there's been a lot of turnover. So that actually is a challenge.
That's been my thing as well. I've probably hired and let go, or they've quit or whatever. I don't know, 30 or more assistants.
Wow.
Yeah. I have a very technical job role that they fill, and it's not an easy.
It's not for everybody.
It's not for. We've had people come, American people come and not be able to hang.
Yeah, their job's not for most people in general. It doesn't matter where in the world.
But when you get the right ones, and it's amazing. So if you cycle through enough, you'll get like really good quality talent, and you just want to keep them happy and work with them. And then you train them, and then that's a whole nother thing.
You train them, but then what I've learned too is you need to pay them appropriately. Some people go into it thinking, okay, well, I hear stories that it's $5 an hour, $6 an hour. Yeah, you can get a basic person to do monotonous, mundane tasks for something like that. Plus, maybe you're going to pay an extra $1 or $2 an hour for the management company to do their payroll and all of that kind of stuff. But the better ones who have better skills, and especially the ones that you've trained up, there's value in that. Yeah. So we make sure that we give them appropriate raises, each year, annual raises, and that, we might end up actually overpaying for the industry for what you would pay a normal virtual assistant abroad, but I'm okay with that. I'd rather pay an extra $2 an hour. Sure. And I'm still saving probably 60-70% on the wages compared to what I would pay an American person, but I'd rather pay just a little more and not have that turnover. I've learned that, and it's been pretty successful. We've had very little turnover. We've had a few over the years.
That's the math. I'm at like 60% savings, versus what I could hire in the U.S.
That's about right.
Mm-hmm. So that I mean, if they're doing almost that job perfectly or very close to it, it's a big win.
Huge win. Yeah.
Another thing, I don't know if you guys noticed, but I realized that at the start, so we wanted to hire multiple virtual assistants part-time just to get our feet wet. So we'll say 20 hours each. So we had like a bunch of virtual assistants at 20 hours each with a lot of turnover because they would go
work somewhere else. They need another 20 hours somewhere. 40, and if they like that better, they're going to leave you.
Exactly.
Yeah, so you're opening yourself up to that 100%. Turnover.
So we just realized that reduce the amount, put them on full-time, overpay a little bit, give them bonuses, give them time off when appropriate, and make them happy.
Absolutely.
And you'll hopefully gain a little bit more retention.
Yeah, that's what we do. So the four I think I have, 4 or 5, however many I have right now, all 40 hours a week. Like that's only what we'll hire. Smart. Like some people come to us and say, well, they'll do part-time. We don't even want to do it, partially because of what you just described, also partially because we're going to spend all this time training you to get you somewhere. For my roles, like it's 3 to 6 months before you're like really useful human versus maybe, because it's not mundane stuff. Sure. You know what I mean? So it's like, we just need you full-time locked in. I need full control of your life. Like, you know what I mean? Like I need, Sure. Another thing we learned too is they treat them like they really truly are a part of your team. Absolutely. And they're human beings, they're people too, just like, we kind of, it's not that you don't think of them as human beings, it's just that they're so far away, and if they're in the Philippines or they're wherever they are in the world, it's just kind of out of sight, out of mind. So you really have to make conscious efforts to check in with them once in a while and just, how are you doing? And just have a chat with them, even if it's 5 minutes once a month. Absolutely. Just how's everything going? Do you have any suggestions about your position? Anything that we can help you with? And just know that they're appreciated. Because I'll tell you that I think the great majority of companies that use virtual assistants don't really do that. That's not the same experience, Yeah.
So,
I have 15 minutes, 8 to 8:15 is my allotted time with the operations team, which they hit me with questions, video chat. They're on video, we're on video. Most of my ops team is on that call, and they interact with me or interact with the lead listing assistant. And so I'm talking to them every day, every morning. Yeah. Besides the chats that come through, hey Larry, I have a question about this. We're doing that. What are we doing here? Besides that, I see them physically every morning. That's great. Monday through Friday.
That's really good.
Yeah, it builds
camaraderie and teamwork. Yeah, so they feel that they're a part of that team.
Yeah, we cheer them on,
and they are a part of that team because they're working.
They
with
are
you full time.
100%. Yeah,
spending a lot of time with you.
Good.
I did realize, so when we first got started with our first virtual assistant, I think it was our first virtual assistant, we noticed that some of the work that we were expecting to get done, at first it was working out very well. Then it kind of started to teeter off, and we didn't know what the problem was. And we actually found out that that virtual assistant was subbing out to another virtual assistant, right? And for whatever reason, so this virtual assistant, we were paying probably closer to $8. So that means this person was subbing out to someone else, right? And the work was really, really underperforming.
Oh, no.
So it's tough to really be on top of it when you have someone that's sub 40 hours a week, right? Because you just don't know.
Yes, and the company that we work with, that Virtually Incredible, they monitor their screen time.
Okay.
You know, just making sure that they're
Sure.
logging in and logging out on time, and there's some amount of
Oversight.
work and oversight. If they're not giving us like minute by minute screenshots, we probably could request that maybe if they have that software. I know that software exists, but we know that they're doing the work. Plus, the kind of work we have them do, we know they're doing it or they're not doing it because it's time sensitive. Like they're intaking our new eviction packages and they're doing all the searches that we need to do. It's task driven, right? So if they're not getting back to us in an hour or two on this new intake, then you're not doing something, and we'll know pretty quickly. But
Interesting.
Not all positions are like that, of course.
No.
So
we use a service called Time Doctor. I don't use it. We don't use it for every one of our assistants. Like some of the ones that have been around forever. Like
that you
it's
trust
just
and
yeah,
you
it's
know
just
they're
like
good.
like if to your point, if it's things aren't getting done, I know because the dynamic. It's so dynamic in my space where it's also like they need to be responding like pretty
Emails
quickly.
need to happen,
Emails or just in the chat. This question's getting posed to this other assistant. They're asking me, and if somebody's not responding within a few minutes, it's just like what were you doing? You know what I mean? You're not doing your work. So, but Time Doctor has been a good tool if you're trying to monitor people working abroad. Like you can see, like we caught a couple people early on, like they were taking class, like they were going to college or whatever it was, while working.
Yeah.
It's just like, this doesn't work. Actually, that was local assistants was doing that. A couple of local assistants we had. They're just not doing their work. Yeah. You can't do two things at once.
Yeah. When you have a large team, it's tough to be on top of everyone. So you just have to hope that as a whole, everything's working. And
Yeah, for sure.
So that's cool.
So that's one of the challenges you've been overcoming with virtual assistants.
Yeah,
that's
I learned
great.
a lot from you guys. I
appreciate that. Thank you. We are too.
Of course. Yeah, in the business, it's ever changing. Right?
Yeah, for sure. So that's a personnel issue. Is maximizing profits while also giving great customer service and
probably one of the other larger difficulties with property management is vendor retention, quality vendor retention, especially for the handyman type of trade. Everything outside of handyman is pretty, there's so many companies and qualified companies that it's very easy to get bids quickly.
Like electricians,
lawn maintenance or whatever.
All that stuff is pretty common and easy to come by and reliable.
But good handyman or not.
The handyman piece is really difficult.
The quick fix, need you there tomorrow, broad
the
scope.
sub $100 repair is really tough because of many different reasons, right? And also the amount of maintenance requests that comes in for those is so great. You can't just have one person running around. If
I was going to ask you that.
200 units.
Doesn't work, huh?
It's all about scheduling and being on top of them, and so we don't have them as employees, so they're independent contractors.
All of them.
Correct.
Okay.
Yeah. So we, as a property management company, we probably should. I
was going to say, once you get to 200 plus units, maybe you could have one that could do the majority of the stuff.
Yeah.
And then overflow can go to a contractor.
It could.
Maybe?
Yep. That's a good idea. And obviously that's additional revenue for a property manager. But we just prefer to have everything like transparent and flow directly to our vendors. There's obviously no kickbacks or anything like that. It's just like what you see is what you get. It's not a profit center for us.
It's not a profit center. Got it.
Exactly.
Okay.
Exactly.
Okay.
So far we've gotten it down pretty good, but tomorrow something could change.
Yeah.
And then with all that work getting done, as managers, we have to be on top of it and make sure it gets done correctly.
That's it. Quality management.
We're dealing with individuals. For the first year, it could be fantastic, and then all of a sudden, they're overworked or they got too much going on, and the quality of work goes down. So we just got to be on top of it as much as we can.
Yeah. Yeah, Larry and I always talk about this kind of stuff. Just with the vendors that come and work on our properties, it's they tend to do good work, but it's sometimes gets pretty pricey and pretty expensive. And
that's the catch. It's like
weighing that.
What's the like you can get cheap stuff done and it's not great quality, right?
Yep.
And also that person will be here today and gone tomorrow.
Yep.
Right. And so,
or do you want to pay $200 an hour to fix a toilet?
Right. Exactly. And so,
$100.
Whatever it is to fix that toilet, it's like, where's the balance? That's
Exactly.
like, can we get that reliability and pay something that we
and what's your
deem
time
fair?
worth?
Yeah.
Because it's going to come with a headache.
Yeah.
Or having to go out twice and having you to go out just to make sure that it gets done right.
Yeah.
So
that's right.
Yeah.
Yeah.
I don't think we'll get it 100%. I don't think we will.
And it's always going to be in flux, like you said.
Exactly.
Like this is business.
It is
That's
what
how
it is.
this game is played. Yeah.
Another really big piece, like with underwriting properties, I'm sure you guys have learned, is like, especially when you're underwriting properties in today's market where the numbers are so thin, people underestimate the maintenance budget tremendously. Because everyone always uses the bank norm, which is, I don't know, call it $500 a unit or something like that. It's just so far off from reality.
Way off.
Yeah.
Way off.
And reserves. You brought up reserves.
Reserves too.
You know, a lot of investors don't even consider reserves.
They don't even put it in, right?
They don't even consider reserves.
We were joking, me and my business partner, we just submitted an offer yesterday for something in, of all places, Ocala. And we're joking about just like the CapEx budget. And we're just like $1,000 a door, right, is what we were underwriting. And we're just joking about this building down the street, which you guys all know in Lake Worth that we have. And we're just like, we blew that $1,000 a door on that building like out the window like in January. You know what I mean? Like, what do we even
before we got started?
Yeah, before the year even started, it's gone. And we're still underwriting $1,000 a unit. It's like, I don't know. Like otherwise, like on the flip side, it's like, how do you even do a deal then? Like, because if you're underwriting $3,000 a unit, it's like none of these things make sense.
Don't even work.
Yeah, so it's a tough balance to strike. Because you're playing that appreciation game as much as you're playing the cash flow game, the yield game. Yeah, exactly. So
we're South Florida, especially, and maybe much of Florida, is no longer in the cash flow game. It's really not as of now. Certainly, South Florida is not. You're with financing, you're probably not going to cash flow. Certainly, if you bought a deal cash, you'll cash flow. But it's the numbers don't make sense on most deals that I look and underwrite.
Not at all.
Not for cash flowing. So I'm even, Larry found a triplex for me that I'm under contract with, and we're going to close in a couple weeks up in Palm Beach Gardens. Generally a pretty good area. But there's a lot of CapEx that has to be put into the property. And then afterwards, assuming that I can get the rents that I want, maybe might make a few bucks each month, probably more like break even, maybe even lose a few bucks each month. But the reason I'm doing it is twofold. One is the appreciation game that we're talking about, that this is a long-term hold. The other is that, I get the cost segregation and accelerated depreciation benefits for my taxes that I get to write down my taxes. I'd rather go bury the money in that property than to pay the IRS that money. I'd rather get $100,000 or $150,000 back in accelerated depreciation next year when I do my taxes for this year than to, again, give it to Uncle Sam. So that's and I think that's one of the reasons we're seeing property prices so high, that 1031 exchanges, money moving from New York, California, et cetera, from higher priced geographies, all of that. But I also just think that this is the new norm for South Florida, that I don't know that this is ever going to go away. I think we now move from a second tier geography that we used to be always now into the first tier, where with LA, New York, some other big cities that have very high high prices and very low cap rates. Exactly. So
I think you're right.
Just my theory.
Yeah. Combined
and you
with
got to
other
decide
issues.
though, right? Or do you go and buy a property in Indiana or small town Georgia or Arkansas, and you'll get a 12% return, but that property is barely going to appreciate in 10 years and 15 years.
Yeah, so it's just a cash flow.
It's just cash flow. And then the problem with cash flow is then you got to pay the IRS every year. I don't like paying Uncle Sam money. That's kind of my new theory. So, but anyways, and then do you have any Did you find any other challenges with client acquisition? What do you, besides word of mouth and people seeing how you manage your properties, do you market a lot with that? Is there a lot of mailers, or do you do other?
So we've definitely experimented with mailers. We do it ever so often. It's expensive.
Okay.
But
do you think you get a return on that? A decent
absolutely.
return? Okay.
Yeah.
Okay.
It's tough to say because one year we could get a great return.
Got it.
You never know.
You
right?
just don't know.
True.
You never know.
It's a crapshoot.
It's the same in your business too,
Yeah.
right?
We just do it every month.
Yeah, so if you stick to the plan, that's a great idea,
Yep.
right? And let's say even if it doesn't work for a year, just stick to the plan.
It's just a cost of doing business the way I look at it, because and it's also like it's a branding thing for me, more so than anything. And it's like you said, it's a little different from property management to what we do for residential brokerage, but it's a branding thing. So
the way I look at it, as far as like commercial real estate sales and management goes, eventually every property is going to sell, right? And eventually someone's going to need a manager, because eventually they're not going to want to manage it themselves anymore. They're going to get to a certain age, or they're going to sell that property. As long as they remember you and your face is in front of them or your name's in front of them, that's the ideal goal.
Yeah.
Right. Hence the branding piece.
Might not be right now, but
exactly.
yeah, could be in 6 months.
Just because you send them a postcard and it sits on their desk, that's okay if they're not ready. But hopefully they will be. And it kind of goes back to my brokerage piece and my acquisition piece. It's like I've been building relationships with multifamily owners for years and years. They may not be interested in selling this year, next year, 5 years, whatever, but eventually they will. And as long as they think of me, and we have a good working relationship,
Yep.
I'll be involved in that transaction.
Absolutely. And be a resource for them, too.
I'll help them out
So when
any
they
way,
call you in
shape, or
6
form.
months and say, hey, do you have a good electrician?
Absolutely.
I'm self-managing right now.
Yeah.
Haven't decided to move with you.
Absolutely.
Some property managers might be like, well, that's what you need me for, and
Exactly.
why would I give you my
that
vendors?
information?
No.
Even
of
if you
course not.
never use me, I'll give you information because you're a neighbor, right?
yeah.
And it's goodwill. Yeah.
It's goodwill, and maybe you'll return the favor, maybe you won't, doesn't matter.
Yeah, sure. 100%.
Yeah.
And then the brokerage piece, is it something that you actively promote, or is it really just something that your clients get to know you for? And
Sure.
again, they know that it's getting time to sell, and I remember that Max really helped me out here, or he's been a great resource,
Sure.
or he is my active manager, and
Sure.
those are the types of deals you do, or
Yeah, so it's a little bit of organic, word of mouth, but I'm also pretty I don't want to say aggressive, but I make a big effort to go and reach out to property owners.
Okay. Are you still doing that? The
Absolutely.
calls and
Absolutely,
great,
yeah.
good. Yeah, I know that's how you uncovered the sixplex that I bought,
And so
from
many
you.
other deals.
And
that
you broke.
Well,
Max
you
and I
have to,
talked
right? Because
about, yeah.
You have these off-market deals, which is great.
I would say 95% of my deals are off market. It's
awesome.
I rarely work on listings.
It's such a niche area too, because
Because it's difficult.
It's difficult. Some people, they aren't ready to list. The Marcus Miller chaps, the Franklin Streets, the CBREs, they're awesome at what they do, and they're great at getting listings, but there's just a certain percentage of people that, sure, they'd like to know what their property's worth, and maybe they would sell. They aren't yet committed. They weren't thinking about selling, but they'll take an offer.
Yeah.
Why not?
Yeah.
That's
Absolutely.
kind of,
Yep.
you just have to get them to the why not,
Yeah.
right?
Yeah.
Is that?
Yeah.
That's
Exactly.
more how the commercial space works anyway, right? It's more of an off-market-ish thing, right? I mean, you have to, and also not even that. Like, you've brought me deals in the past, deals that I should have bought.
Me too.
Yeah, right. Yeah.
We should have bought all of them.
The deals that I send you guys, I'm open to partnering as well. Like,
Yeah,
if I
that's
send
good
a
to know.
property out, I'm open. I'm definitely open if you guys are open to it, and we'll have a conversation like that. So.
I saw Michael sent me a 10 and a 16 unit yesterday. They were one bedrooms in Lake Worth.
Yeah.
I tend to move away from one bedrooms. I tend to like the twos and the threes,
For sure.
but you never know.
Everything
I
has
mean,
a price, Everything
Sure,
has a
everything
price.
does have a price, and who knows? Maybe we'll talk offline about that.
For sure.
So,
We actually sold that property to the current owner.
Oh, really? Okay.
He's trying to make a quick buck. So I don't know if I would invest in that.
Got it. Okay.
But we want to at least show it to you,
Show
at
it
least
to
show
people.
you what's out there before, because that property is going on the market. So I wanted to show you guys
Before it
it's
actually hits.
information.
That
it
is
helps your
helpful.
properties.
That
'cause
is
you have
so
properties
helpful.
in Lake Worth, right?
Yeah.
And then you have more information to create more value within your property.
Agreed.
So it's always good to be looking at all deals.
It also helps
agree
me move
100%.
fast when the right one pops up, because I've seen that one that you showed me, and then you're like, hey Larry, this is here's the next one, and then I'm like, I already know the answers because I've seen everything.
And just
else
keeping an idea of what
me.
price per door is in a certain area. You know, for 1 bedrooms, 2 and 3 bedrooms, it's good to know so that you're right. When you see another deal, that's if 2 bedrooms are $250,000 per door in Lake Worth, and you see one come out for $220, I'm like, okay,
maybe I'll take a look.
This is I need to take a deeper dive on this one. So that's good.
You'll know pretty quick too. But so most of our deals are off market, and that's why I tend to focus on the 10 units to 60 units, because those are for the most part, mom and pop owners, right?
Agreed.
There's definitely some institutional,
independent, not institutional.
Non-institutional. There is some layover, crossover, but it's easier to build relationships with an individual versus a corporation, right?
100%.
Those corporations know who to go to when they want to offload properties.
That's great.
So
you do outbound calling as the main source for that. Okay.
It's the only way to do it.
How much time are you spending in a day doing that? Like, is that
so I use
time block?
Yeah. So when I was doing this solely myself, all day. Yeah. Right. All day, at least 5 or 6 hours doing that. Now I do a little bit of less, and some of my brokers do a little bit more of the calling. And if they uncover an interested owner, I'll jump in. But also, we also lead with property management too. So we have all these services we can offer.
It's like, what help do you need?
Exactly.
Yeah. How can we bring you value?
And I'll give you value for free. If you're not interested, I'll give you my plumber contact. Just to help, and that opens the conversation. A lot of these owners, you guys own properties too, you get calls from brokers all the time.
Sure.
Most of them are, I don't hang up on them because I appreciate where they've come from, what they do.
I'm never rude to them ever, but I'll just say
because we're chasing deals anyway, so we're building relationships.
Sometimes I'll even talk to them, and I'll just be like, what do you have? I'm not selling, but I'm a buyer.
Absolutely.
So,
absolutely.
I treat broker calls like my free inbound opportunity to prospect for more deals. They're like, hey, are you selling stuff? And I'm like, no, but I'm buying stuff. So do you have anything? And so the conversation changes. They're usually not so super thrilled about that, but
what I personally have found, and it's just,
but they're happy they're not getting hung up on.
Yeah, right.
A lot of the younger guys, a real human being. Oh my God, this guy's being nice to me.
A lot of the younger guys, when you start talking to them, they're like, oh my God, what a refreshing conversation. This old man, like, I'm not an old man. They're like, you're not talking to an old man, and he's not slamming the phone on my ears or telling me that
you
go take a walk.
Conversation.
They're like, oh, this is refreshing. Yeah, it's true.
Gives them some hope for the rest of the week.
Exactly.
The rest of the week. Hopefully their career. I remember 5 years ago, I had one
They're just about to quit. They're just about to quit the whole business, hang up their license and move on.
Actually, one of my first jobs out of college was I was on a marketing team, cold calling, trying to sell advertisement space in a newspaper for the Colorado Rockies. And I was based in Florida, right?
Wow.
So I learned rejection 101.
Totally. That's a
newspapers.
I was going to ask you, how do you deal with the rejection? It's just, at this point, doesn't matter.
Now it doesn't affect me at all.
At all. They could curse at you, whatever.
Yeah, move on.
You'll
be nice. They may be nice tomorrow.
Delete my phone number.
That's actually the thing. I've been told off, never call me again, never talk to me again, and then all of a sudden either I get a call from them or somehow we end up in a conversation again, and either they don't remember or they apologize to me for the way they treated me, right? It's like insane.
Some people just have bad days.
Of course.
They just got in a fight with their boyfriend or girlfriend or wife or husband, and their kid's annoying them, or you caught them at the wrong time, and maybe they'll be super nice the next day. So
and also, they may not want to sell today. They say, I have a 10-year hold period. That could change next week. When I see that, when I hear an owner say that, and I find out that the property sold off market a couple days later, a couple weeks later, I really realize that you just got to be on top of things.
It goes back to like when they decide to do something, you want to be the first person they think of. So for me in my business, that's the concept or the goal in a specific market area. For example, Boca Raton, that's where we invest the marketing dollars to hopefully be the first person someone thinks of.
Between the mailers, between the internet marketing, between the calling,
door hangers, whatever, you go down the list of all the things you can think of.
And when they get hit from 3-4 different ways, they're like, who is this team? Like, something's going on with them. This isn't the average realtor.
We send out these handwritten letters. Actually, might be something you want to consider. And if you hit them at the right moment, they pick up the phone and they call you. And so we might get out of a 5,000 mailer batch, we might get 20 calls, and like 4 or 3 or 2 of them are actually real people that want to sell.
That's impressive.
And then we go in and we either, in a lot of cases, we're listing the property because we're giving them their options. Here's a guy that'll pay cash, and here's what we could do if we put it on the market, and that's been successful. But to your point, the point you're making, I just ran that same campaign recently, and it's kind of a dud. Yeah, to a degree.
Sure. You don't know.
Which is kind of funny. I actually think it's the time of year because like if you run it like July, most people aren't really, the market kind of slows a little bit right now from a new listing.
They're traveling, vacations, kids are out of school.
But the one that I did have success with was January 10th or 5th or something like that. Everybody's in like go mode then.
Yeah.
Right?
Yeah, I
Like,
wouldn't be sending something out in December.
right, totally. Nobody's thinking about that.
That too.
For sure.
Yep.
Right. Yeah.
Yep.
Yeah. I think maybe October, maybe November a little bit,
November's
and then skip
good.
December for sure.
November's good because a lot of people have plans starting for January 1st. So maybe I want to sell for tax purposes or whatever, or I want to,
especially in your line, the investment sales.
Towards the end of the year, that's actually not a good. That's a good point. Like you got to get out of things or
before the tax year comes around. It all depends.
Yeah.
But then again, there's no rhyme or reason because then you're going to be dealing with the individual.
Agreed.
And someone, a lot of people sell based off of circumstances, positive and negative in their life, right? And hopefully it's positive, but sometimes it's negative.
chasing pleasure or avoiding pain.
Yeah,
right.
That's it.
Putting them in a headspace of what that money could do for them too. If they've owned a property for 10, 20 years, or they're a boomer who's 72, and have you ever not taken that cruise, that world cruise that you wanted to take? Did you go to the Med? Did you go to Alaska? Did you do those things? And is this, if you don't, how nice would it be to get a profit of $600,000 from your triplex that you've had for X number of years? Putting them in that mindset is always helpful.
Usually they're thinking about that already.
It's like vision.
Hopefully.
They're envisioning
for
it.
sure.
Yeah,
for sure.
Yeah. Go ahead.
I was just going to ask, how has the brokerage business in the commercial multifamily space been over the past year or two? How is it feeling right now?
Very slow. A lot slower. It's the slowest it's been since I've been working this, and I've only been working in it for about 15 years, but very slow, right? It's such an interest rate sensitive asset. I have done a couple deals, mostly cash deals, right? Because deals today are not financeable. When you have interest rates at 7%, you can't just have a 7% cap rate, right? It has to be greater than that. So a lot of cash deals and a lot of renovations to try to boost the rents to try to make it work. I do see that there's definitely more interest. Well, I think the interest has always been there. It's just like the cash on the sidelines. And the sellers, as I'm sure you guys would probably agree with me, the sellers are still in the mindset of 2 years ago. Oh, someone offered me $200,000 a door for my unit. I want to stick it out until I could get that.
Yeah.
So that's
especially if they've owned it for a long time and they are getting good cash flow and income. Maybe they have a small mortgage or no mortgage at this point, and they don't have to sell.
They don't. If you don't have to sell, they'll probably hold on.
Because we're in this weird economic environment where it's not great. Inflation has really hurt people, and especially the working class. But people who own assets and they're getting cash flow, it's not bad. Our vacancies are maybe ticked up just a tiny bit, but it's nothing that's catastrophic. It kind of takes some type of, I don't want to use the word black swan event, but it takes something that's unexpected to happen to shake people from whatever this status quo is, and whether that be interest rates dropping a full point that may start the process. We saw a little bit of that a couple of days ago, but I think interest rates have kind of started to slowly pop back up again. Or an economic recession, some kind of war, some kind of major stock market crash.
Absolutely.
Dropping 10% or 15% the market. Whatever those types of events can shake things up.
And it may not
cause a lot of transactions.
Absolutely, but it may not directly impact our tenants and our multifamily property, but it's macro, right? It's people's interpretation of what's happening in the market.
Tenants may not care that the stock market drops 10 or 12% because most of them don't have money in stocks. As long as they still have jobs, if employment's still high, then you're good. But so tell us a little bit about the syndication and what you've done and when we use the word syndication, are all the deals that you've done, are they all truly syndication where you're complying with blue sky law and SEC rules, where you have sophisticated investors, or are some of these smaller joint venture deals where you're working with just a couple, like a friend and families?
That's a good question. For sure. It's the latter. So it's
got it.
Yeah, so it's not extremely complicated.
Got it.
I have the
what do we call true syndication? More like partnering.
Yeah, where there's general partners and limited partners, joint ventures.
Yeah.
So I like to focus on the more simplistic breakdowns of the acquisitions, and it's really just on a equity, cash in, equity type of split, right?
Got it.
Most of my deals are with family and friends, so I don't have to overcomplicate things. A lot of the buildings I do own wholly myself, which is a lot nicer because
then you have no one to control.
It's easy to issue. It's easy to deal with issues, but I don't have that type of money to buy all the buildings I want, right? So as of late, actually, you guys had JJ Gilbane on your podcast, and I actually found a couple deals for him, and that was the first deal, two of the first deals that I've actually invested in where I was a limited partner.
Oh, well, great.
And that's the first time I've done that. At first I was never comfortable with doing that. I wanted full control over the asset. But if you find someone that you trust and you're willing to walk and take that next step with, it makes sense.
JJ's a good dude.
He's a good guy.
Really good guy.
Yeah, he's got a great reputation. His whole family has a great reputation. So when you can lock in with someone who's not just that you can trust and a great reputation, but someone who's very sophisticated, very intelligent. They know the business. They've got all the pieces. Why not? Why not throw some money in there? And I'm sure you have enough stresses in your regular daily business and your brokerage and your property management and doing the finding transactions for people that, not having to worry about one or two of these other investments is pretty nice.
Absolutely. And those types of investments were large enough where there's 50 plus investors. And I don't really want to be dealing with 50 plus investors that I'm not really good friends with, right? I'd prefer to buy a 20 unit with you guys, right?
Yep.
And I may not necessarily need the capital to do so, but I like to do it just for commodity, right? And just having partners and
there's value out there.
You guys have value on the business side as well too, but even if we were all equal, it's still fun to partner up, right?
Distribute the risk a little bit.
Yeah.
Have cash ready to go do the next one instead of deploying it all on one deal, right? It makes sense.
Spreading it around.
Yeah. And because there's risk, right? You may not think there is, but there's always risk, right?
Yeah.
And geographic risk too, especially with storms. You may have a hurricane that could come in and hit the North County area pretty hard, but Broward's fine and South Palm Beach is okay, and vice versa. It's having properties in different geographic areas.
Absolutely. I personally prefer to focus on Broward and Palm Beach counties, just what I know the best. It's my backyard, but still, you could be spread out within those two counties to reduce some of that, strike risk.
Having a 60-mile difference is
it's
matters.
A thing. Totally,
it's a real thing.
Absolutely.
And a Category 3, 4, even 5 hurricane.
For sure,
it's a thing.
Yeah.
So, I'm just praying this year we don't have a storm and insurance gets back under control.
I'd probably put 15 new roofs on my buildings this year.
Well, I was gonna make that comment earlier when we were talking about capital expenses. Like I just had to put 5 roofs on, and it's just like insurance dictated that, and it's just like boom out of nowhere. Like they weren't leaking, but like they're old. I get it.
Yep.
We buy old buildings, and we were riding it out until we were forced to do it, and we're forced to do it. So we got some new roofs on.
So going back to reserves with partners, that's the most important thing, right? If you own a property wholly by yourself, you don't really need reserves as long as you have the capital to come out of pocket. But you need to build those reserves because imagine having to go to your investors to put 5 new roofs on.
How do you think about that? Like when you do this with family and friends, because you got to keep it cool,
no,
right?
I keep true reserves.
Yeah.
And
you do.
And they're conservative.
Yeah. Okay.
Yeah, they're
good.
Like almost 10%.
So you have money in the bank account?
Almost 10%, yeah.
Okay,
interest,
good.
It earns interest. And then, once that reserve gets large enough, I'll then make distributions from it because you don't want it to get too big. But
of course.
Roofs, that's a big one.
It's a real thing.
Roofs, plumbing, a lot of cast iron plumbing today's environment today, breaking.
Cast. I have one of my buildings, the copper supply lines. We just one of the tenants was paying like $600 a month in water bill and flagged it to us and was like, "Yo, this is wrong," and we're like, we had to get leak detection out there because we couldn't find it ourselves. It's in the block.
Yeah.
You got to open up the block, so you got to open it up behind the tub. So now you're destroying the tub. You know, it's just like, so now you're renovating a whole bathroom.
Yeah.
Like these are the things that are real risk
course.
environments. Yeah.
Yeah.
And if you didn't have the money, that
Oh,
would
yeah.
not be good.
Yeah,
Yeah.
$500 a unit pro forma. Expenses not going to cover
It's going
that.
right there. It's going right
but
there.
You've talked to a lot of brokers that send you pro forma. You know,
course.
but $500 a unit, it's a bank norm, right?
This is the speech every time, like, I have a conversation with guys who don't actually own stuff like yourself that call me to like flip me their OM, their offering memorandum, and I'm just like, I just for everyone's benefit. I understand they're trying to sell. I understand the standards. That's how I would do it too if I was probably in their space, just marketing it. But like I have the same conversation. Hey, like I think everyone doesn't understand how much it costs to operate these like 1970s, 60s, 80s buildings that we own in South Florida. Like they don't understand it.
And
Most brokers
even
don't.
just to start with, rent comps are so aggressive on most of these offering memorandums from these brokerages. It's ludicrous.
Yeah.
You know, they're saying that these 2-1s can get $2,100 a month in Riviera Beach or in, you know, Lake Worth. Like, it's not going to happen. You know, so
I always say prove it, right? Like,
yeah, prove
so
it.
if
Show me some real
Yeah.
comps, and then they'll show some other buildings that suppose they have these comps. But I'm like, where are you getting this info from? You know, and if you try to really dive down a little deeper, and they're like, well, I don't know. It's, you know, I saw a property that was listed for this building. Well, it may have been listed there. How long was it sitting on the market for? 60 days.
You have to do your own due diligence in
Yeah.
that, for those things.
Yeah.
Like that's.
I don't believe them.
I usually say prove it with your own building, right?
Yeah.
If you could get that, prove that you could get that in your
with
building.
one of your units or two
But
of
the
your
answer
units.
is always no, because they probably can't.
they can't. Yeah.
So
Yeah.
Agreed.
yeah.
Yeah. Yeah. I you know, OMs are nice and pretty, and those great offering memorandums. You have 30 pages of, you know, pretty pictures and stuff. But yeah. The financials, that's where the money is made, or
sure.
money's lost if you
yeah.
don't pay attention.
You know, if you're purchasing your own building and underwriting your own building, which you should be, you know, have a bunch of different scenarios, right? Maybe 4 different income scenarios of where it can
Exactly.
be. Not just pro
A
forma,
sensitivity
this
study.
is where it's going to be. A sensitivity study,
Yeah.
exactly.
Have you bought or syndicated anything recently, or what's been the last deal you've
building
done?
I purchased was myself in Riviera Beach about 3 years ago.
Okay.
Yeah.
Yep.
Any building that I've actually purchased, I've purchased significantly below market.
Got it.
And because the owners had a number in their head that they thought was the market, and I knew for a fact it wasn't. And
Yeah.
I get excited about those things. That's not to say that I wouldn't partner up with you guys or someone else on a deal that isn't as attractive, or call it a market deal. But you're spreading the risk a little bit, so I'm okay with that.
Yeah.
But if I'm buying something myself, it needs to be a pretty attractive deal.
That's
Makes
the
sense.
beauty of the business you've created right there. Because Jerron and I, obviously, and every other investor that's watching this would love to buy stuff under market, right? And initially, I left the engineering world to do brokerage full time to get those opportunities, but the way things happened, I ended up in the resi space, and yeah, we've picked off some resi deals that are great, but it's not as effective as what you do, which is talking to owners every day,
Right.
and occasionally someone shows up with a price that makes sense for you to do.
There's no
and you
problem
do
with
it.
the cherry picking a deal once in a while for yourself. I mean, you
Yeah.
put in the hard work,
Yeah.
so you might as well.
Absolutely.
Those are the ones I
That's
get
there's nothing-
excited about. Though.
That's the
and they
point.
don't come around very
No,
often.
well, they
It
haven't
hasn't
come around for years.
3 years,
Yeah.
correct.
Yeah.
You're right.
So
To your point, exactly, and that's how I felt too. I don't know, the last deal must be a year and a half ago, but there have been some things that popped up that I probably should have done that didn't do.
So
As
something
always.
that looks interesting, and then it happens to go under contract. So I'll find those deals. You know, it all depends.
Yeah.
You know?
Yeah.
But I would love to partner up with you guys on something soon.
Let's find
Something
something.
that's big enough, right? Like a triplex maybe is a little
No,
not really
it's
worth
got to
it,
be
but, you know.
a little bigger deal, but
sure.
that'd be fun.
Where do you think the market heads now? I mean, you're kind of close to the forefront of this.
Yeah. I'm hoping with these looming rate reductions that we've been hearing about, I hope that stirs things up a bit and makes the deals that are currently being looked at, or the owners that are currently considering selling, maybe it makes those prices a little bit more realistic.
Yeah.
Yep.
It's hard to say though.
Yeah. Yeah.
Again, those cherry pick deals that I was talking about, like the ones that I buy, those will be around forever in any market, but
Right.
you just got to find them, right? And the deals that the general public is looking at are the ones that are on market. So that's who you're playing ball with, right? And you have to be aggressive. And goal for me, or the goal I recommend for others, is put as many offers as you can. And just because a deal went under contract 3 times and this is, this is the 4th time it's back on the market, hey, maybe that's a good opportunity to get in there.
You just never know. To your point, you're dealing with the individual. You never know what that seller is going to do. Yeah. For example, the deal that I just mentioned earlier that's under contract at 1.2. 3-4 months ago, we were listed at 1.6, so 1.695. So like, and all of a sudden, she's ready to take that deal right at 1.2. So
she was,
she did it, and there's no world that she was taking that 3 months ago, a month ago, maybe even a week ago. But just so happened that person showed up, right place, right time, and got the offer in at that
It's
price.
funny. It brings me back to like where I got started in the business, which is retail leasing. So I would be giving leads to manage, lease out shopping centers or lease out big spaces in shopping centers, and I would always be the 2nd or the 3rd broker in that activity or in that scope of work, right? And most of the time I would be able to get the deal done, but the other 2 weren't. So it's just like the right timing, right?
Yeah.
And then usually what it comes down to is the owner keeps on reduces the price and becomes more realistic.
Exactly.
That's why I love picking up listings that are about that. You get a call like, "Hey, I'm dropping this agent. I'm moving with your agent," and they were listed at 250. I just took one. Well, this is a super low deal, but like they were listed at 250 with this other agent. I convinced them to go 199. I'd be surprised if the deal doesn't sell 199 this weekend. You know what I mean?
Yeah.
It's
and that's the market, and that's where it should be, right?
And that's the
Maybe
market.
at first it was a little.
The market will tell you.
The market will tell you. Yeah. It's all about timing.
When it's crickets, the market's telling you you're not in the right place.
Exactly.
Yeah. No, for sure.
Yeah.
Well, hopefully. Hopefully something happens that's not too traumatic, and maybe on the good side, maybe some rate drops that'll shake things up a little bit, and that'd be nice, and make these deals start to make sense.
Yeah,
a little bit
for sure,
a little bit more.
What's next for you? What's your plans?
Same old.
Yeah, I love that.
Keep grinding. Plan. I always have these ideas of additional business ventures, and I always find myself just stick to what you've been doing.
Exactly.
I still enjoy it. I'm bringing some new blood into the company. I got a couple new brokers working with me, and I get to train them and teach them, so I enjoy that. It has been. I brought on one associate about a year ago, and I told him straight up, this is the worst time to be in this business. But it's also a good time because you're able to build relationships. So for when the market changes, we can start buying properties, right?
Yeah, it's almost like you wish, like for us, we're younger. Like I started in 2010, 2011, right? And I didn't have any experience prior to that. And I was just in it and I'm like, oh, I'm buying real estate. This is how life is. Yep. Didn't really understand it entirely.
Yeah. And everything goes up and up and up.
Yeah,
wow,
and that's
this is amazing.
Exactly.
Yeah.
So
this is the easiest game ever.
Easy.
Yeah.
Sharon's
For 12
over
years
here.
It just went up. Yeah.
Sharon's over here slinging foreclosures many years before the world's imploding around him.
He sees what's going on.
Yeah.
That can happen.
So if you have that previous experience, when the opportunity strikes, you can strike. Right? Yeah.
And it's all about building those long-term relationships. And if you don't do what we do, then you can't do that. If you're just getting the deals pitched by brokers, that's okay, but it's just going to be on a limited basis.
Mm-hmm.
But I'm just going to stick to what I'm doing.
I love what you said there, because this is a lesson I have to keep telling myself, which is don't get distracted. Like, my partner and I will talk about some different things that we might want to do or get into some different areas of the law or what. It's a distraction, and when we refocus this year on our marketing and on our, all the different things we do, our videos, on spending more on our pay-per-click, Google advertising, just that alone, for example, has increased our business significantly this year, and we're seeing much better returns on new client acquisition rather than trying to do some pie in the sky kind of thing. It's keep grinding, pour money into yourself. You're your own best investment. Spend those money on those mailers or on those callers or whatever it is.
Be creative with new
You tweak
marketing avenues.
Do some A/B tests on things. Try some things this way and try some things that way, but keep to that core business that you're doing great in. People know you in the area, in the industry. You have a good reputation, a good brand, and it's only up from here. So if you keep reinvesting in yourself,
I love that response, because most real estate agents are just like, they're entrepreneurial by default. So they're like just running around, oh, let's go do this new thing and that new thing. Whereas like I've benefited from just like crazy obsession and focus.
Yeah.
Like we've been working on so much stuff. John here knows we've been working on just, we won't let it go.
For sure.
I'm like tenacious and just gonna keep doing this thing until it works, right? And we're just gonna pull on that lever.
Or you break. One of the two.
One of the two. Exactly.
Something's gonna happen.
Something's gonna move.
No, you're obviously doing amazing too. So you're and Larry is the perfect example of this. Just hyper dedicated, hyper focused, hardworking, and focused on, Boca real estate transactions, and he went from a nobody a few years ago, being an engineer, to being the number one realtor in East Boca, which is pretty awesome.
Appreciate that. Thank you.
No, well, it's truth.
I think on the purchasing real estate side, I think for like guys like you and I who aren't Max, like where it's just like he's got this like I don't know, inside track to things. But even for guys like you've done this for me too. You brought me a deal that I didn't do that I should have freaking done in Boynton Beach that was through another broker. And you were like, hey man, I think you should do this. And I should have done it. Like I should have took your advice in hindsight in 2020. But I think for us, it's like building those relationships more so than even like you're building relationships with sellers. We're not doing that as our day job. So it's like, we should just talk to all these brokers.
Absolutely.
We should get to know everybody.
You should.
And so that's what there was a time where I was doing the cold calling, having someone cold call and talk to sellers. But that requires a skill set that like, it's different to have someone do that on my staff versus a Larry or Max do that.
Yeah, you can't have a virtual assistant do it.
You just can't.
Yeah.
It doesn't work like maybe 10 years ago that was a thing, or even 20 years ago that was a thing. Yeah. Now it's like people are just they need
very
to talk
skeptical.
to somebody.
They're sophisticated with their phone calling, who they pick up for. They can tell really quickly if you're
you have 2 seconds.
If you're sales. That's it.
When you get an owner,
it's your
that picks
opening
up a
pitch.
phone,
You better come with something.
You have 3 seconds. You may not even get a pitch in.
Yeah.
You have to say something so quickly that allows them to stay on the phone.
Yeah.
So
it's true.
Yeah.
It's tough. It's a tough game.
Yeah. Build. If you're looking, build good working relationships with brokers. I mean, you guys are on my hot list of top 10 people to reach out to send off market properties to. So like that's what you want to. That's what you want to try to get in on.
Well, again, that's the trust relationship, and there's. I also know that you have to. You also, as someone that has a relationship with someone like you actually have to do some deals. Like even if you're kind of on the fence with something and you're like, okay, I think this is probably pretty good. Maybe I might not. One of the things I think about is, if I'm 50-50 on the deal, maybe something that's going to push me over to actually doing the deal is I want to continue a great relationship with you, for example, and know that I'm the real deal. I'm not BSing you, and you didn't give me opportunities for 3 and 4 years, and I didn't pull the trigger on any single one of them. Not that I would just do a deal, a crappy deal for no reason. That's not my point. Is it's got to be a reasonable deal. But
I would say never have that kind of pressure on you. I know you don't. But if you spend the time to actually look at what we provide and actually like put some thought into it, and quickly. Because like what I do when we get an off-market property, I don't blast it out to 100 people. I send it to 3 people and hope to get a quick response. Because this stuff is usually really time sensitive. And you guys, both you guys are really good at getting back to me quick. If it's a quick no, fantastic. Thank you for letting me know quickly.
Yeah.
Right.
So.
Yeah, I want to do that same day. That's another thing, is honor that commitment that you're bringing us.
As best as you can.
Sure.
As best as you
can.
Course. Because a lot of those deals that you do send do get picked up quickly.
I have no doubt.
Not all of them, but they do.
There's a buyer for everything out there at a price.
For sure.
So,
yeah, for sure.
Yeah. Well, good. Anything else to add? Any other questions for Max? This is awesome.
Yeah, I appreciate you guys having me.
Yeah.
Well, one of the things I love here is, I've known you for years now. We've done a lot of business together, but, it's only when we're able to do these kinds of long-form conversations that we really get to know each other even better, which is great. So we appreciate you coming on here.
Awesome. Thank you.
We'll put your website link in the description of the video, but what's a great way for people to get in touch with you if they have the need for property management or wanting to sell a property or buy a property, multifamily?
Yeah, just be arborresidential.com.
That's
pretty simple.
arborresidential.com.
Arborresidential.com. Yep.
Perfect.
Yeah.
Awesome.
And we'll appreciate that. Thank you.
We'll put that link in the description.
Cool.
And thanks for being here.
Thanks, guys.
Appreciate it, Max.
Cool. Thank you.
If you enjoyed this episode, please like and subscribe.